Is the Tesla sell-off about to cease, or is there more to come? We're going to discuss a number of expert forecasts regarding the future of Tesla stock today. Greetings to all, and thanks for returning to Everything Tesla Stock. Is now the ideal time to purchase the dip? Diverse experts hold wildly divergent opinions about the future trajectory of Tesla stock. That's what we're going to speak about today, so be sure to stay tuned until the very end to make sure you don't miss anything. There are a number of fascinating expert viewpoints, some of which are absurd and most likely unheard of. Before we begin though, please remember to hit the like, subscribe, and turn on notifications buttons if you enjoy this kind of content in order to be updated on all things Tesla. Tesla's stock price fell precipitously in June. The maker of electric vehicles has seen a 47% decrease in share price since the beginning of the year. A fresh wave of pessimism that swept through the market in reaction to the U.S. Federal Reserve's hawkish remarks and actions exacerbated the recent fall. In reaction to 8.6% inflation that was greater than anticipated, the Fed increased the benchmark interest rate by 75 basis points to a range of 1.5% to 1.75% in May. This was the biggest increase in a single meeting since 1994. Market participants reacted negatively to the announcement, believing that the Fed's influence over price manipulation had diminished. On June 11th, Tesla revealed that a 3-to-1 stock split was planned. We believe the share split would assist in resetting the market price of our common stock so that our workers will have more choice in managing their ownership, according to a filing with the Securities and Exchange Commission. Smaller investors who might think they can now afford the shares as a result of the split are the target audience for the split. The price of Tesla hardly changed, maintaining its declining trajectory. Companies in the U.S. and throughout the world seem to be getting ready for a recession. The CEO of Tesla, Elon Musk, expressed his dire concerns about the state of the economy in an email to staff members early in June, urging them to let go of at least 10% of the firm. That day, the price of Tesla stock dropped by more than 9%. The announcement made clear that the company can anticipate a decline in its financial performance soon. In the meantime, Tesla has increased the cost of a few of its American-made cars. The Model 3 now costs $57,990, a rise of $2,500, while the Model Y is now $65,990, up from $62,990. On the day the price hike was announced, Tesla's stock price dropped by about 9%. There are several points of support to keep an eye on if the price continues to drop as of June 21st. The first is the most recent low for Tesla shares, which was $625, and is followed by horizontal support at $540. As a consequence, there is a total downside risk of 4% and 17%, respectively. On April 20, Tesla revealed its financial results for the first quarter of the upcoming fiscal year. With $18.76 billion in total revenues at the end of the first quarter, the company's top-line results increased by 81% compared to the previous year. At $16.86 billion, or an 87% increase over the same period last year, automotive revenues continue to make up the majority of this total. In Q 2021, Tesla's operating margins rose by 1,349 basis points to 19.2%, while its GAAP gross margins climbed by 779 basis points to 29.1%. In the end, Tesla's GAAP net income came to $3.32 billion, up 658% from the previous year. On the same basis, earnings per share rose by 246% to $3.22. During the 3 months that concluded on March 31st, the company produced $2.23 billion in free cash flow, while its total cash equivalents and marketable securities stood at $18.1 billion. At the conclusion of the same quarter, Tesla's long-term debt and financial leases totaled $3.15 billion. $66.04 billion in total assets were made up of $1.26 billion in Bitcoin. Regarding the Tesla share price estimate, Capital.com senior market strategist David Jones stated that the current decline in Tesla shares is in line with the general stock market sell-off, with U.S. indices like the S&P and NASDAQ reaching new lows for the year last week. It's not surprising that old investor favorites, such as Tesla, aren't finding much love at the moment, Jones stated. He continued by saying that investors may be closely watching the current level of Tesla stock in order to detect a change in the sentiment around the stock market. Although the stock price has nearly dropped from its peak in 2022 of $1,200 per share, there may be preliminary indications that a base is forming ahead of $600 per share. Currently, a lot depends on the sentiment of the broader market, since there is still a great deal of uncertainty over the duration of high inflation and the exact amount of interest rates required to attempt and combat high prices. Investors are unlikely to quickly return to a risk-taking mindset. However, this $600 range, which could represent a floor for the Tesla stock, is still worth keeping an eye on. Investors with greater patience will be content to wait and watch to see if overall market circumstances become better, he continued. As of June 21st, market data indicates that the consensus opinion of Tesla stock was neutral. 13 of the 34 analysts that now grade the firm recommended buying it, 9 recommended holding it, and 8 recommended selling it, based on the most recent closing price of $650.28 for the stock market. Analysts have set an average price target for Tesla stock of $893.47, which indicates a possible upside of 37.4%. Analysts estimated that the 12-month price range for Tesla shares would be $250 at the lowest and $1,580 at the highest. It's worth noting that this month, UBS Group and Royal Bank of Canada, RBC, upgraded Tesla from neutral to buy. The latest proposal by the Tesla board to approve a 3-for-1 split will undoubtedly be approved in August when the EV manufacturer's investors are anticipated to gather, according to Seth Goldstein, a senior equities analyst at Morningstar. The current fair value estimate remains at $750 per share. Regarding Tesla's future performance, the analyst stated, "We believe that lower production at the Shanghai factory and the startup costs related to the opening and ramp-up of its 2 new plants will have a negative impact on second quarter profits. But we anticipate that profit margins will rise sequentially in the third and fourth quarters as production picks up." RK Invest manager Kathy Wood predicts a 732% increase in Tesla stock to $5,800. This is presuming that the company sells 17 million vehicles by 2026 and that the majority of Tesla's revenue would come from its upcoming autonomous taxis. Production of these is expected to begin in 2024. Even ARK's conservative estimate of $2,900 per share, which would imply a 316% price rise over the current price, is quite persuasive. It is important to remember that Tesla has produced returns of more than 18,000% since going public in 2010, even though some of these projections may make your head spin. Put another way, if you held on to $10,000 that you invested back then, it would be worth $1.8 million now. Arahe Investment currently owns around 1.3 million Tesla shares, valued at $911 million. Due to the general tech sell-off, the holding has decreased from a peak of roughly 5.6 million shares, which led Wood to take advantage of some prior profits. But with Tesla about to split its shares, ARK will soon own millions more shares. Wood is still as optimistic about the long term as she has ever been, even in light of the most recent tech sell-off, which has caused Tesla stock to drop by almost 47% from its peak. Due to supply chain disruptions and more challenging economic times, Tesla is facing certain short-term challenges that could reduce demand for expensive products like cars. But in April, ARK revised its Tesla modeling and revealed a price target of $4,600 per share by 2026, a 560% rise over the current price of Tesla stock. A company's stock price may soar in response to rapid expansion, making it seem expensive to small-scale individual investors. At the moment, a single Tesla share costs roughly $656. As a result, the company has suggested a 3-for-1 stock split, which will increase the number of shares in circulation by 3 and naturally reduce the price of the stock by 2/3 to roughly $218.67. Wood's support has also arrived at a crucial moment. Although the company just released updates on several